Dreaming of owning a rental property or flipping a house? Getting a loan for an investment property can be your ticket to financial growth, but it takes teamwork. Today, I'll guide you through the steps, the paperwork, and the key people you'll need to contact. What is an investment property loan? An investment property loan is a loan for properties you plan to rent out or flip for profit. These loans often have higher interest rates, stricter requirements, and larger down payments than loans for personal homes, but with the right preparation, they can pave the way to serious returns. Key people you need to contact. Success in securing an investment property loan involves assembling the right team. First, a lender. Specialized lenders for investment properties offer tailored options. Look for conventional, commercial, or hard money lenders. Mortgage brokers can help compare rates and terms. 2. A real estate agent. Find an agent with experience in investment properties. They'll help identify high ROI opportunities. 3. A property inspector. Before finalizing your purchase, hire a certified inspector to assess the property's condition and spot potential issues. 4th, a contractor or renovation expert. If you plan to flip or renovate, a reliable contractor will estimate costs and help you plan your budget. Steps to get an investment property loan. Here's your step-by-step guide. 1. Check your finances. Ensure a credit score above 700 or at least 620 for some lenders. Save for a down payment, usually 15 to 25%. Prepare at least 3 to 6 months' worth of cash reserves for mortgage payments. 2nd, pre-approval. Contact your lender or mortgage broker for pre-approval. They'll need documents like tax returns and pay stubs, bank statements, and proof of assets. 3. Property search. Work with your real estate agent to identify properties with strong rental potential or good flip ROI. 4th, loan application. Submit your application along with the required paperwork. We'll cover that next. 5. Closing. After loan approval, attend the closing meeting to finalize your loan and ownership. Required paperwork. Here's what you'll need to get that loan approved. 1. Proof of income. These can be tax returns for the last 2 years, pay stubs or business income statements. 2. Assets and debts. These include bank statements for the last 2 to 3 months, proof of investments or other assets. 3. Property details. These are the purchase agreement, rental income projections, or flip profit analysis. 4th, additional documentation. You'll also need additional documents like your credit report and a proof of down payment, such as bank transfers. Having these ready ensures a faster, smoother process. Tips for approval. Want to boost your chances of approval? Follow these tips. 1. Lower your debt-to-income ratio. Pay off debts to show you can handle new payments. 2. Build cash reserves. Have enough savings to cover repairs, vacancies, or other surprises. 3. Highlight experience. If you've managed properties or flipped houses before, show lenders your track record. 4. Research loan options. Compare terms from different lenders to find the best deal for your goals. Risks and challenges. Investment properties are rewarding but come with risks. Vacancies, no tenants mean no income. Maintenance costs, repairs and upgrades can eat into profits. And market risks. Property values and rental demand can fluctuate. Prepare for these challenges to maximize your success. Your investment loan blueprint. Getting a loan for an investment property takes planning, paperwork, and the right team. By following these steps and connecting with the right professionals, you'll be well on your way to building wealth through real estate. Ready to invest? Let's make it happen together. Thanks for watching. Don't forget to like, comment, and subscribe for more insights on personal finance, investing, and entrepreneurship.